Find out more about Tesla, the business that is currently driving the market. Tesla soared dramatically once the earnings report was released. The explanation is that performance as a whole was better than anticipated. The encouraging comments made on the earnings call, in particular, contributed greatly to the stock price increase. After that, let's go over each of the crucial sentences in this earnings report one at a time. The higher than expected margin is the first aspect of this earnings report to catch your eye. Tesla's $1.19 net profits for the quarter exceeded forecasts. The company reported a surprise high profit when everyone anticipated a sharp decline in net profit because there was a sizable price cut in the fourth quarter. This was made possible by Tesla's exceptional capacity for cost control. This quarter, Tesla's operating margin was 16%. Spending reductions deserve the most praise. Tesla sold 25% fewer automobiles than it did this quarter despite spending $1.876 billion on operating costs. Spending was actually down 16% from the same period last year, when it was sold. As a result, whereas the scale has grown, the cost has shrunk. This is an example of Tesla's superior cost control. It has been demonstrated, in particular, that the shipping price leveling approach, which was used from the previous quarter to avoid the peak season, provided great benefits in terms of cost efficiency, although suffering short-term losses in delivery volume. As a result, the operational profit margin was nearly identical to the 16.4% average of the previous 4 quarters, and the non-GAAP net profit margin was similarly 17.03%, which is not significantly different from the 17.16% average of the prior 4 quarters. It is stated that Tesla's biggest asset is its excellent margin capability. Without including plug-in electric vehicles, Tesla is the only firm that generates a net profit from pure battery electric vehicles. At the moment, other corporations are losing money when trading on the market. Even the margins of these electric cars outpace rivals. However, other businesses will struggle in the electric car industry if Tesla starts a game of chicken by cutting the price of electric automobiles going forward. Therefore, it is inevitable to make the prediction that Tesla will continue to hold a commanding lead in the electric vehicle market. The growth in sales and profit margin in the energy sector, which experienced its first profit last quarter, is something else to take note of. Sales increased by about 80% year over year to $1.31 billion, and the surplus increased by 1.5 times from the prior quarter, when it first turned a profit. In addition, the deployment of energy storage expanded dramatically by 2.5 times compared to the same time previous year. It is anticipated that a considerable increase in the sales of 40 gigawatt megapacks played a significant effect. If this occurs, the energy division's contribution, which currently represents only 5% of total sales, can be anticipated to increase over time. As a result, it is anticipated that the contribution of the energy business to Tesla's future value will rise significantly in addition to that of the electric vehicle business. Financial well-being also increased. Debt and equity both rose over the previous quarter. Overall, the debt-to-equity ratio increased from 1.2 to 1 to 1.23 to 1, the higher the growth in equity. Additionally, liquidity, which is crucial to financial soundness, has increased, as seen by the increase in the last quarter's ratio of current liabilities to current assets from 1.46 to 1 to 1.53 to 1. First off, this is essentially what the performance report said. The genuinely significant information was actually provided later in the earnings call. First off, the uncertainty caused by the decline in demand is currently the most crucial factor for investors. However, a report that has recently surfaced may help to reduce this ambiguity to some extent. In January, Tesla slashed pricing across the board. But ever subsequently, a sizable order that nearly doubled output has been placed, for the first time in Tesla history. Elon Musk made this point. Tesla's official goal for this year is 1.8 million units. Given the macro environment, this aim is anticipated to be quite conservative. Elon Musk really mentioned, albeit informally, that he was considering a sales target of 2 million units this year during the results call. Thus, rather than the actual aim of 1.8 million units, it is 2 million units. In fact, it can be claimed that there is a very strong likelihood of accomplishing this goal if there are currently sizable orders that have increased production from the first month. Tesla's daily worldwide production capacity is now at 5,000 units. However, the fact that orders for about 10,000 units per day are being received indicates that demand is approaching twice this production capacity. Of course, orders won't keep coming in at this rate, but even if they do for around 15 days, there will already be 150,000 units produced. Then, even if you only sell 300,000 units, which is just twice what will need to be sold in the final 2.5 months, you will still be able to sell 450,000 units, which is far more than the previous quarter's record-breaking sales volume of 405,000 units. Then, 2 million unit sales this year would not be at all exaggerated. The share price has skyrocketed on the stock market as a result of the incredibly optimistic sales volume growth estimate. Additionally, a lot of significant announcements, including the Cybertruck, felt like they were held off on purpose. According to the explanation, the rice cake is for Investor Day on March 1st. As I mentioned in the previous video, Tesla, who had expressed this level of concern, is now displaying a very positive flow as a result of reviewing his performance, and it turns out that he is reaping numerous advantages from the IRA bill. I believe it to be a really nice buying opportunity.